Hello ladies and gentlemen, and welcome to my YouTube channel Forex Prop House. Today I'm going to share with you some scalping techniques that I believe to be of great help to your trading career in general. I hope that you will be with me till the end of this video. Yes, guys and girls, let's get it going with the video. So it doesn't matter what type of trader you are. It doesn't matter if you're a day trader, swing trader, or even a scalper. You must always start doing your analysis on higher time frames. This will give you a general picture of what that particular pair has been doing so far, which will help you to predict the market next moves accurately. So looking at the daily time frame, the market shows that Boom 300 has been on a strong downtrend for weeks, if not months. This tells you that on this pair, sellers will have much higher probability to succeed more than buys, reminding ourselves first how the nature of the market always moves is always crucial in trading analysis. So here's just a quick reminder that the market always moves in three phases. The first phase is known as the impulsive phase, then comes corrective phase, and lastly another impulsive phase. So that's how the market always moves. And looking at the market right now, it clearly shows we are out of the ranging market, or you can call it corrective market, and we are now on an impulsive phase, which is clearly very good for us, as the general rule says never trade when the market is moving sideways. Guys, this information should always be on your head. You must at all times remember this. If you can note, then make sure you note it down and stick it on your wall or something. So let me delete all these drawings to have a clear chart and then progress to the next lower time frame, which for this case will be the 4-hour time frame. And now here's the one of the most common mistakes most of the impatient traders make. Emphasis on the word impatient. Most will get, let's say, from the daily and go straight to the 1 hour or 30-minute time frame. I do not know where the hurry comes from. If you are a trader, please never make that mistake. It will cost your account no matter the size of it. So on the 4-hour time frame, we see that on the daily impulsive move, on zooming in on the 4-hour time frame, that the market price is on a minor resistance level right here. But it is important to remember that this level may or might not hold up, as no one can predict the market 100%. So you must always think in probabilities, like if this level fails to hold, you must wait until the price at least reaches this level before even thinking about entering into the trade. So the information that we got on the 4-hour time frame is that the market price is on an important resistance level. Note that. So we now progress to the 1-hour time frame so as to get more zoomed in, and this, guys, it's what it is called top-down analysis. So on the 1-hour time frame, at this level, on zooming in a bit more so as to see the candles clearly, I noticed the presence of a very important reversal candlestick pattern just right here. Can you take this time and answer in the comment section what is the actual name of this candlestick pattern, please? I promise to reply to all comments as soon as I see them. Now just take a few seconds and answer the question. Well, if you answered a doji candlestick, you are correct. If you answered an inverted hammer, you are also correct. Now what's next is we have to decide what will be our exit point in case this level fails to hold up, because remember, no one, absolutely no one, can predict the market 100%. And afterwards, after being comfortable with the risk on the table, we enter into the trade just right away.
A few moments later.
Well, what are you waiting for to join today with the winning team? My dear friends, always remember this. Practicing technical analysis without giving it time to understand trading psychology is a complete waste of time, and the work done is equivalent to zero. One of the ways to improve your trading psychology is to practice mindfulness. This means being present in the moment and being aware of your thoughts and emotions. By being more mindful, you can catch yourself when you start to feel emotion and take steps to regain control. It is also important to have realistic expectations when it comes to trading. No one can predict the market 100% accurate, and it's important to accept that there will be losses along the way, but by managing your expectations, you can avoid getting discouraged and stay focused on the long-term goals of your trading plan. In conclusion, guys and girls, psychology always plays a huge role in trading success. By managing your emotions, being mindful, and having realistic expectations, you can improve your chances of success in the Forex market. Thanks for watching, and don't forget to like and subscribe. Till next time, bye bye.